Hey, Dan Passarelli. Well, we got a little bit of follow through from the Fed this morning. The market was up. It pulled back a bit from its highs. For a minute, it looked like it might have started to head lower, but we still closed up about 1.4% today in the S&P 500. Now I want to call your attention to a specific trade. There was a trade in ET, which is Energy Transfer LP. And they are a natural gas transportation, et cetera, company. So there was a trade that happened in there today, and it was a roll. Okay, so someone used a time spread in order to close a long call position that they had and roll it out to get a little bit more time because apparently they think they need an extra week for that move to happen. So let's take a look. So here's what happened today. In ET, in the February 3rd, 13 and a half calls, the open interest was about 53,000. Well, today what happened is 51,000 of those traded, and also 54,000 of these traded in a expiration 1 week further out, the February 10th. Now, mind you that that earnings is February 15th, so this is a pre-earnings trade. And so what can we deduce from this? Well, this is what you would call a roll. What they're doing is they're closing these long calls that they had, and they're opening up new long calls 1 week later. Now, why would they do something like that? Well, if you look at the chart here, this stock has had a pretty good run up since the beginning of the month, right? Ran up pretty good and dipped briefly into overbought territory, had just a smidge of a pullback. But this person apparently believes that it could have a good run up going in to next week through potentially next Friday, still leading up to earnings. So that's a pretty massive trade. I mean, it's a smaller dollar amount. Basically, they bought about 50,000 contracts at 5 cents. So, we're looking about maybe $250,000 wager on this stock going up over the next 7 or 8 days. So this is one of those that's happening, especially when you can buy a really low volatility here. It's 24.8. And we can compare that. I mean, I guess that's still a little bit above historical volatility, but the fact of the matter is, whatever the implied volatility level is, if the stock rises just 50 cents, and keep in mind it rose 21 cents just today, if it rises 50 cents, these options can easily quadruple or more and double depending on how much time decay passes between then and now. So that's a trade that I really like. It was called to my attention with our Time Spread Genius service. And hey, I hope that helps. As Dan Passarelli, trade smart.